Good afternoon, everyone, and welcome to Vantage Markets, the Monday Open. This is I think, second or third now of our new live stream that we're doing here. It's hosted by the Vantage Private Client Group here in Australia. That's me in Sydney, Jeff, and Mark over there in Melbourne.
Hey, everyone.
So today we're going to be going over what happened in the markets last week, what are the key events for this week. We'll go through some technicals and answer some questions that Mark and I have been hearing from our clients this week. So last week, the big event was the Reserve Bank of Australia keeping Aussie interest rates unchanged, largely as expected, but the big four banks here in Australia are starting to get a little bit tetchy and are starting to favour the RBA cutting rates kind of over the next few months. I think they're all being a little bit. We don't want to be first into when we're going to be calling it. Westpac, I think, and ANZ are calling for a rate cut before the end of the year, and the other two banks are looking for it early next year in the first quarter. We also saw an escalation of the Middle East conflict over there with Israel targeting Hamas pages, which is something that I've never seen before and certainly hasn't been done in that region before. It's a new, level of infiltration there that they were able to get into those pages, which is spooking a few people. The upshot of that was that Hezbollah, who Israel is targeting, asked Iran to attack Israel with nuclear weapons. Iran, in their, infinite wisdom, decided that that was not a great idea and turned that down. But the fact that they, had the courage to publicly say that they asked for that is a bit of a big deal. We also had a new Japanese Prime Minister announced. That was on Friday, and it caused a little bit of volatility in the yen pairs. We'll talk a little bit about that later on. We'll go into a bit more depth on that one. And we've also had late last week and kind of early this week as well, the Chinese government has announced a massive stimulus program over there in China. It's good timing because they're open today, but they're off for the rest of the week for Golden Week holidays. So the big focuses for this week, we've got Fed Chairman Powell speaking tonight on the economy. He speaks a lot, but he doesn't normally speak directly about the economy. So Fed watchers will be very carefully eyeing every single word that he says. Tomorrow morning, we'll see the Japanese Tankan survey, which is a survey of manufacturing and non-manufacturing companies in Japan. It's one of the biggest surveys in the world. Excuse me. And surveys for employment and purchasing intentions over the next 3, 6, and 12 months. Then on Friday, we have the big one, the US non-farm payrolls number. Obviously, after the recent Fed rate cut, market players will be looking to see what's going on with US employment in an effort to gauge whether the Fed will do 25, 50, or nothing next month. That's the rest of the data calendar. Mark, is there anything there interesting that I missed?
Yeah, we have a few events this week. I mean, besides the big one on farm payrolls, which is out on Friday, we do have European CPI, which is expected to come out on Tuesday. So the forecast is actually lower than the previous. So if it does tick down, if the actual ticks down below the forecast, you could expect the euro to weaken as it indicates cooling inflation. I mean, the ECB will probably then, I mean, they already are cutting rates, but they'll probably maybe cut rates even further if inflation keeps dropping. We also have with employment claims as well in the US.
That's
so that pretty much, yeah.
That inflation number in Europe is interesting to me because I remember when the Ukrainian-Russian war started, everyone was up in arms, metaphorically, about how European inflation will go through the roof because Russia is one of the biggest oil producers into just about every European country. This doesn't seem to have happened. I mean, their inflation has been a lot more moderate than inflation throughout the rest of the world. Even in the UK, it's higher.
Yeah, it's they've done well with their inflation. I mean, Yeah, I think they've cut like a couple of times now, haven't they?
Yep.
The ECB, yeah, a couple of times now. So, yeah, we're in a situation where, yeah, I mean, all central banks are cutting. Australia is on hold at the moment, so I guess this data will sort of like, tell the central banks sort of how fast and how big to cut. So yeah, as the data prevails, you just got to sort of see what happens. Yeah.
Well, don't forget our friends in Japan are not cutting.
Actually, the new prime minister is actually he's big on actually increasing rates.
Yes.
That's what I was reading. Yeah, so it'll be interesting because they've had, I mean, what, zero interest rates for the last 20 years now. So they'll be interesting.
Well, they've also had stagflation for the last 40. So,
Yeah.
yeah, I think Japan is an interesting case study to what happens if you do cut interest rates to zero for too long, um, because it's almost impossible to get out of it. Do you want to talk a little bit about technicals, Mark?
Yeah, let's jump straight into the technicals. So we have the AUD USD daily chart here. So as you can see there, it's popped above the 68 cents, actually come back down and retested that area around mid last week. So you got a range there of 68.25, 67.88. So it's come back down, tested that area, and just sort of jumped back up. Uh, Last time I looked, it's on 69.30s. We do have an extended target as well around the 71 cents area. You won't be able to see that on the daily unless you sort of zoom out on the chart. You'll be able to see it on the weekly, though. You got a couple of resistance levels there at the 71 cents area. So you might see some profit taking up there if it does get up there. But yeah, look, the reason why this has been so strong is a few factors here. I mean, obviously, weaker USD. We had the Chinese stimulus come out last week as well. That's generally good for the Aussie. And also the PCE index, which was out last week, that was lower than expected. So yeah, it just indicates inflation is cooling quicker than expected in the US, which means that they'll start cutting rates potentially more aggressively. I mean, we'll get more clues on that as Powell speaks tonight. So yeah, investors will be watching that for any clues. What do you think, Jeff?
Oh,
What do you think he's going to say?
no, I mean, well, I kind of like the fundamentals a little bit more than the technicals, but I do like it when they all line up. Um, on a fundamental perspective, you've got the price of gold is really strong. All base commodities are really strong. China is just about to release a massive amount of money into the economy. Everything points from a fundamental perspective for upwards for the Aussie. Um, like I said, it's nice when the technicals line up as well.
Yeah, exactly. So we'll go on next to the
Oops.
where is it? Oh, yeah, wrong one. Yep. So that's the British pound against the yen. So as you can see there, on the 11th of July, we made a high of about 208. So that big drop off there is when central banks sort of started cutting rates. So they basically indicated that, hey, it's time to cut rates, and generally markets are forward looking. So yeah, that's the drop in right there. That's over the course of a few weeks actually, and then it's gone up and range bound within that range. I've drawn there the upper range and the lower range. Uh, it's sort of like a ascending range because it's sort of making like higher highs and higher lows. So I've drawn those channels there. But as you can see, recently that was the announcement of the new prime minister in Japan, and the candle actually closed bearish, as you can see there. So bearish engulfing candle. Basically, bearish engulfing candles when the candle closes below the close of the other candle. So that's a typical bearish engulfing candle as well. You also got bullish engulfing candles as well. But in this situation, yeah, you got a bearish engulfing candle, and yeah, I mean, Japanese yen obviously strengthened on the back of that, as me and just spoke about before. He's big on increasing rates, but that's if he does that though. But yeah, there's big speculation there, and yeah, I mean if this does continue down, you'll see a target range around the 185, which is on the bottom of that lower range there. So yeah, we'll see how it plays out. I mean, this is the daily chart, keep in mind, so it may play out slower than expected. Yeah, I mean, if you're looking for more aggressive entries, more tighter entries, then feel free to drop down to the 4-hour or hourly chart.
That recent spike up looks a little bit like a 50% retrace of that big move.
It does, yeah. I mean, it's probably, yeah. Actually, you're right about that. If I was to draw a fib right now, it would probably be around 50%. Yeah.
Yeah, I'm just eyeballing
Yeah,
it, but it looks like it's pretty close.
it is pretty close.
All right, so we had a couple of questions, I think, that we were asked over the course of the week that we thought we'd answer in a broader audience. Obviously, we answered them on the phone as well. Question one, what was the reason behind the wide swings on the yen on Friday? So what we had was the at that time current Prime Minister stood down, and the LDP, which is the ruling Liberal Democrat Party over there in Japan, which I think has pretty much ruled untouched since World War II or something. It's ridiculous. They've never been ousted. They had a ballot for who was going to take over. In the end of the first round, a gentleman by the name of Takashi was actually ahead. Takashi was the reason for the yen weakness originally because he's seen as a little bit more of a moderate. But when they finally got to the final round, the gentleman named Ishiba won. Mr. Ishiba has been very vocal in his calling for higher rates in Japan, and obviously higher interest rates would support the yen. So that's the way that the market played out. Question number two was, what are the implications of the Chinese stimulus? Obviously in China, well, not obviously maybe, but in China, they're going through a little bit of a rough economic time. Youth unemployment, which is between the ages of 17 and 24, is at or near all-time highs. So this is the worst it's ever been for young people getting jobs. The property sector is a little bit of a mess as well. We also saw the headlines of Evergrande. There were several other giant Chinese property developers, and by giant, I mean they're bigger than the Australian GDP, right? So I mean they're big companies. They all blew up kind of in the last 3 to 6 months. So China, which is a really good move, I think they've injected some money into the system. They also cut two of the core rates over there in Japan. They cut the lending rate that the central bank will lend to the banks. That rate cut implies that the banks can then lend more money to people at more friendly rates. One of the other things that they did was they also cut the SDR requirements that banks have to hold. Those SDR requirements are a percentage of real cash that needs to be held for their levered positions. I think they cut those in half, which means they can lend out twice as much as what they already have. China is this is kind of their MO, generally speaking. They like to lend their way out of trouble. The Chinese government is a big holder of all funds, and will look like they're going to be deploying that pretty quick smart. The timing was also really quite interesting. The first steps of those appeared on Thursday, the second steps on Friday. The Chinese market today, the Chinese equity market is up about 14% since the last time I looked, and China is closed for the rest of the week on Golden Week holidays after today, so they'll be closed Tuesday to Friday. So it's always nice to end the week on a Monday with your share market up 14%, I guess. So that's all that we have for you today. If you've enjoyed this will be posted on our YouTube channel and in our trading room, our VIP trading room. If you haven't looked at our VIP trading room, I really do urge you to. Mark and I are logged into that all day long. If you've got questions, if you want to send us a chart, you want us to look at a chart, you can do that through the VIP trading room. We can have conversations there as well. Additionally, as well as us, there's also several analysts from the Everest Fortune Group. They're a Southeast Asian-based analysis company that work very closely with the hedge funds up there in Southeast Asia. Those guys can also answer questions, and they provide a little bit of analysis as well. Every Monday morning, we also have our weekly technical video. This week was focused mainly on equity indexes, and I think the young lady went through about 3 of them. On a weekly basis, every Monday morning, there'll be between 3 and 7 markets that are in-depthly looked at from a technical basis, forward-looking. So we'll give you a bit of a heads up of what other people are looking at. I find that trading can be a little bit lonely at times, and sometimes it's good to get a feel in a real life kind of perspective from someone who's actually doing it as well. And finally, we have the private client daily update, which Mark and I write every morning. That is a wrap up of what happened last night or the night before on markets and what we're looking for to move markets perhaps today. That's an email mailing list that you can get subscribed to, and we also post that within the trading room as well. So I guess the conclusion to all of that is that if you haven't looked at our VIP trading room, you really should. There are a lot of resources in there. There's actually a 7-video course in there that was only uploaded last week as well by Desmond, the head trader over there at Everest Fortune Group. So do please have a look. Thank you very much. We'll see you next week.